So here are the income statement problems we worked in class. Just a simple classification exercise with either net of tax or pre-tax. And of course, note that only below the line items had a net of tax treatment. Again, we're going to add another classification of below the line items to accompany discontinued operations. But as of now, discontinued operations items are the only things that were below the line and also net of tax, right? Everything above the line is pre-tax. This problem I just kind of cleaned up a little bit so that you could see what was going on. Remember how we move these items around. I'll let you look at that. Move interest expense to non-operating, move the loss from the discontinued segment below the line, move depreciation expense to operating, move salary expense to operating, and then move the impairment of equipment up to non-operating. And again, the reason why this is not a discontinued part is because it was part of continuing operations. If this equipment is part of continuing operations, well, then it's an impairment that belongs up here. Remember, we did learn about impairments to discontinued operations, but this discontinued operation is not being impaired. In fact, we sold it. And if you sell a discontinued operation in any given year, you won't have impairment. So then I just went down and use this alteration to recreate the income statement so you can see exactly where these numbers come from. One thing to note is that I meant to add after tax from income from continuing operations, because otherwise income from continuing operations before tax and income before taxes are going to be the same amount. So you take net sales, subtract off your operating expenses, gives you operating income, subtract your non-operating expenses and revenues, and that gives you income before taxes. Apply the tax expense. This is income before or income from continuing operations, and then you subtract off the discontinued ops, and that gives you net income. Then looking at this one, the only real tricky part for this one was that they included a loss resulting from the component that the company wanted to sell, which you shouldn't, right? This $25,000 after-tax operating loss should be below, should not be in net or income from continuing operations. So we put it below the line, 25,000. That increases the 275 up to 300,000, and then we just have to determine the impairment loss. The impairment would be the 550, that is the book value, less the 430 minus 25. Remember, it's if book value is greater than fair value less cost to sell, then we impair by 140. So then we impair, and then we want to impair by the difference between those two, because again, what we're doing is recognizing a loss, which is the impairment of 145, and then essentially we're crediting the discontinued operation. I'll show this to you a little bit in a little bit more detail when we meet next time, when we go over the group work, and then show you exactly how that, not exactly how, but a little bit more in depth as to how that would work with given certain values of assets and liabilities, and maybe that'll clear things up a bit. So we get impairment by 145, but then we have to net taxes from it, and that becomes 87,000. That is the total effect. 25 plus 87 is 112. And then we take 300,000, which is our income from continuing, subtract that amount to get net income. In the next year, I don't give you the bracketed information. I don't tell you what income from continuing operations is or net income is, so you can't back into it. I just asked for the discontinued operation disclosure. It had a operating loss of 25,000. Remember that unless I tell you specifically, assume a pre-tax amount. So 25,000 is pre-tax times 60% would give me the net of tax amount of 15,000 loss. And then we need to figure out the gain or loss. The sell price is 470,000. Remember, last year we impaired the division by 145 to get it down to 405. That's the new book value going forward. And then 470 minus 405 means a $65,000 gain. Again, we take net of tax, and then we get 39,000. Combine these two, negative 15, loss of 15,000 and gain of 39 gives me an overall income increasing effect from our discontinued operations of 24,000.